Okay, hi guys, just Rene with a weekly review for week starting March the 26th. A couple of trades to discuss this week, quite a bit to get through as usual. I'll be discussing risk and reward later as well. Yeah, so let's crack on, eh? Right, first and foremost, the first trade of the week that I took, and which worked out really nice, was the GJ. We had a weekly signal here, as you can quite clearly see. This, you see, I took this before I saw this chart, guys. This was on the Monday, the early session, but I'd already been in this trade from this candle here. I can just show you see this little green candle here, which was the Sunday night candle, and then it started to shoot up. So again, I'll show you basically what happened. Yeah, there you go. Look, another weekly arrow appeared as well. Red pink daily shot up. It's hitting the BB band here, and then from there it was 173 pip move. Now, excuse me, I didn't see this chart until about 6:30 in the morning. You see, MT's put this chart shot out at pushing 10 at night for him, and that's like 3 in the morning for me. So 3 hours later I've seen this, around about 6:30, 7:15, and this is my exit. This is when I got out, when I hit this BB band here. It's just, I know what happens when you hit these bands. Probably the same as that. In fact, it was the same as that. I can just show you on that on the next chart, and you can quite clearly see what happened there. Virtually straight away came down, and I think that came down about 130 pips anyway. So that trade, if I can just show you, that's what it gave me. 173 pips times 2. Sometimes I will leave one trade running, but that 173 pips, it's not worth the risk of a run back down like it did, and then just to gain another 20-30 pips or whatever. So 173 pips is a really good profit from that trade. Okay, right, okay then. Now there's also a really good trade on the UJ. I'll just get it up here. Yeah, here it is. We had this yellow here on the weekly. We had a daily a couple of days back, but if you can just see what's happened on the daily there, we've come up, we've pierced the orange line, and then it's come back down, but then it's starting to go again. Okay, so if you look on the 4 hours, you've got this little red here after this reversal here, this little red. So again, that could be your entry point. I think it was mine. I think I was in at this time. And again, if I just show you the next one, look, there you go, the weekly still involved. We've got a daily min now, and if you look on the 4 hour, look what happened. Shot up. Okay, on the next chart that MT put up, look, the weekly turned to a red yellow. The daily min's just, but here's again where you consider your exit point. You've pierced the BB band on the daily, you've gone up, but if you look on the 4 hour, you've had this beautiful move up here, but now you're getting blues. Okay, and a small red there as well. That would be your exit. That's your exit. Get out, and I'll just show you again on the last chart what happened. You hit the BB band there, look, rejection, and again there's the red blue, and look what happened. Okay, so again, 2 great trades using the weekly, daily, and to a certain extent the the 4 hour chart for your momentum. Great correlation. Just one other thing I want to mention, guys, about correlation. When you're looking at the GJ and the EJ trades, if you have 2 pairs going in the same direction, like if you had the GU going in the same direction as the UJ, then the GJ goes in the same direction as well. Same with the EU, with the EU and the UJ going in the same direction, the EJ goes in the same direction. If you don't know about currency pair correlation, guys, then just do a quick Google search, and you know, there are plenty of sites out there that will tell you about that. Okay, so as I said, 2 really good trades, also showing you, you know, a really clever and easy at the same time exit strategy. Right. Now SM asked a question during the week, you know, do you basically use the weekly signals, or do you go with the trend, which is better? Well, I think the weekly signals, you know, answer that themselves. Wherever you look, the weekly signals, you know, are working. But in particular, that question can be answered great on the UJ. If you look at the UJ, you've got a big downtrend, and then you've had both of these weeklies here have performed. Look, that one's gone right up to the orange line and then found rejection. This one's gone up to the orange line and found rejection. You know, so you always go with the weekly, depending on where you are. I mean, you can't take that weekly there just straight away now, because you're right on the orange line. So what you're waiting for is this pullback. I think MT's been bringing up bringing it up quite often in the room as well about retesting. You know, you've had your moves, so let it retest again, and then if it's going to go again, it'll give you, you know, arrows again, either on the daily or on the 4 hour, maybe both. All right, so always, you know, consider using the weekly ahead of the trend, but at the same time, you know, you have to respect the trend. The trend stops that weekly there. Basically, it's pushed it down. You know, so and it has done again here. But yes, SM weeklies ahead of the trend. Okay, now there's a couple of other things I want to mention. I think I've mentioned about the trades, exits and that. So there's something else I need to mention about, and I think Hans might find this to his liking as well. Right, there's I'm sure many of you have, you know, what R&R is, or know what R&R is. Basically risk to reward. Basically how risk to reward works is it's a ratio on how much you want to risk for how much you want to gain. So if you're working on a standard 50 pip stop loss, and you did these trades here, just let me bring it up, and you did this 95 pips here, right, your risk to reward ratio is a 1 in 2. Okay, because for every pound you've risked on a 50 pip stop loss, you've made nearly £100. Okay, so for every pound you've risked, you've made 2. So the risk to reward ratio is 1 in 2. Sorry guys, it's 1 in 2. Okay, now on this particular trade, 50 pip stop loss was a risk to reward ratio of 1 in 3.5. Okay, so whenever you're taking, you know, a trade, bear that in mind. You want basically at least a 1 to 2 risk to reward ratio. Okay, I'll tell you why now. Let's say you took 5 trades in a week with a risk to reward ratio of 1 in 2. Okay, you won your first trade, that means you made 100 pips. You won your second trade, that means you made another 100 pips, so that's 200 pips. Now if you lost the next 3 trades, you would lose 150 pips. Okay, so basically you would still have 50 pips profit. You know, this is why risk to reward is so good. If you can get a 1 to 2 minimum, you know, and you can take 5 trades and afford to lose 3 of them. I'm not saying you will. In fact, it's nigh on impossible to lose trades with these weeklies if you know, get the correlation right with the 4 hours or with the dailies. Nigh on impossible. Okay, so that's something to work on. If you have any questions on, you know, anything I've mentioned today, then, you know, don't be afraid to ask. I don't mind answering questions. Excuse me. Just one other thing, what to look for next week. I said I'd give you a few tips what to look for next week. I can't remember which was my best chart to pick from. Just hang on a minute, because there's some private stuff in there, guys, so I'll have to move that. I think I've got another chart here. There it is. Right, here we go. This was the last chart, okay, basically shot that MT put out. So let's have a look then and see. Okay, right. Well, you've had this pullback here on the GU. You're approaching. In fact, I think after this morning session, which was Friday, there wasn't much of a movement, but it did. You know, go down another 20 or 30 pips, 30 or 40 pips as it happens. So you probably will be touching this orange line on the weekly. If we don't get a weekly down, right, you're going to get a bounce. You're going to get a bounce now. What you should be looking for will be, you know, either a daily up or, you know, something like this, right? Okay, on the first chart shot, have a look for that. EU, I'm not too enamoured of the EU at the moment. It looks quite a bit messy. I'd leave that. I expect more upside on the UJ. You know, you've been getting these signals now where it looks like it might be changing direction, the trend. You still got your weekly yellow there, you still got that min there. Oh, okay, you've got this pullback here, but this could be that retest that I was mentioning. Okay, so look for another daily up, or, you know, maybe this 4 hour here, maybe another one might push this up again. Okay, again, you know, if the GU and the UJ are going up, then look at taking the GJ up as well. Look for the signals on that. As far as the GBP Swissy is concerned, you've had this huge move up here. You get a couple of wicks on the weekly now, and you get an awful lot of signals here, including blues and yellows. I think we might be coming down a bit. Might be coming down a bit with this one, but again, wait for the signals. Make sure you get a weekly and, you know, fresh daily or 4 hours. UCAD, I'm not too sure what's going to happen with UCAD. It's driven by oil as much as anything else, but you know, this weekly here, you could go through the orange line on the weekly and down again, but you need the signals, guys. You need the signals. You need the 4 hour or the daily, in particular the daily, I think, fresh daily, because you've got a dailies up here. It could be bouncing, it could be going up, so watch for a weekly up, you know, or fresh dailies up. And I think, guys, that's about it. I don't really think I should make these videos any much longer than that. Just you know, the shorter the are, the more you take in. Okay, so yeah, just kind of work on that, and there's plenty of profit for you there anyway, guys. You know, it's just a matter of making money when you can.